Let me record it and I'll send it to you.
Okay.
I'll share,
Okay.
I'll share it after the session.
All right.
All right. Let's go to sharing quickly. No, what was happening was Apple, they are so serious when it comes to privacy. So they wanted me to accept the terms and conditions for privacy and all that. Then they could allow me to share screen. Yeah.
Okay.
All right. Since this is our second session, we sort of now a bit familiar. So I'll go in through fast and then I'll go to current price.
Okay.
Okay. As we know, price does not move in a straight line. But in the actual sense, it should move. It should move like in this arrow. It's called push exhaustion. Okay. When it's changing direction now, it should be push exhaustion to that side.
Okay.
Okay. Therefore, as price goes up, as price is developing, it will create those higher highs, which are then broken by the higher highs. That means when price gets the first high, it was challenged by the next one. That means there's a break of structure happening at that point. Hence, all the higher highs prior to the new ones become the BMSs because they are structures that have been broken by the new price.
Okay.
Yeah. So we've got this structure. This was the highest price before. Then we had another one that was more than this one. So it means this structure was broken. So we have this structure as current. Then we have another impulse breaking this structure to create a new structure.
Okay.
Then we have an exhaustion now. The interesting part that I want to talk about is market moves in cycles. So the first cycle starts by an impulse. Then there's an exhaustion or pullback or retracement. The retracement, the retracement forms in a complex way. That's why it's more like a contraction or consolidation. Or consolidation.
Or ranging.
Yeah, you understand that. Now, because of that, it gives us opportunity below there if we're in a buying market. It gives us opportunity because of those laws. So because the
my question is every consolidation, is there always a fake out?
Yes.
Okay, there's always a fake out before the trend continues.
Yes, because the consolidation, remember, let me draw something here. Remember the consolidation attracts liquidity above and below, depending on the direction of overall trend. If price is ranging here, you ask yourself, where is the overall direction? That's why it's important, first of all, when you open the chart in a bigger time frame, you draw your trends, then you establish your lows and your highs. Because below and above your lows and your highs, there is liquidity. But you have to focus on the most important and more profitable liquidity, which will be in the buying market, it will be at the lower lows. In the selling market, it will be at the higher highs. So in the buying market like this, our liquidity will be found at the lower lows. In the selling market, our liquidity will be found on the higher highs, right? It makes sense. Yeah. So that's where liquidity will be found on the higher highs. We are not interested in the liquidity that's below. There is liquidity here, but it's in the direction of the BMS. Okay. So therefore, what I mean is price would do that. Well, let me just use the editor to be fast. Okay. So now what happens is if the trend is higher, if the trend is going that way, if the trend is like that, oh, sorry. I'm trying to catch the distance doesn't want to allow. Okay. You see the last one, the last leg, okay, imagine, come on. That's what's gonna happen. Before actual price shoots higher. So what happens is it creates the equal laws. You see the first law and that law. Imagine now price is coming from okay, price was coming that way. So we are in a buying market. Price comes here, starts to create this here. Price starts to create that law and this law. It means below this law there's liquidity. And this liquidity, before price goes higher, it must tap out that liquidity before it goes up.
Okay.
So that will definitely be there. So in other words, this is called accumulation, manipulation, distribution.
Accumulation, distribution, accumulation,
Manipulation. Let me write.
Okay,
I'll do that.
Okay. Accumulation, manipulation, distribution.
Yes. I'll use another term again. Manipulation, you see price breaks out of the range. Normally, usually when there's news release.
Yeah.
They create that news for the purpose of manipulating price. This is our distribution. And hence, this is the structure of the candle. You see the way the candlestick looks like. This is the structure of the candlestick.
Okay.
Accumulation, manipulation, distribution.
Accumulation is the ranging.
Ranging, yes. Accumulation is the
manipulation. The manipulation is the fake out.
Fake out, yes.
Okay.
So in other words, listen to this. In other words, in a normal day, in a daily time, in a daily candle, this would be Asian session. Asian session cause of deaths. And then when London opens, it opens with a breakout. It creates the low of the day.
Okay.
In the buying market, it would create a low of the day. If it was selling, it would create the high of the day. So what follows London? What follows Asian session is London. London opens in the morning at 6 o'clock or 5 o'clock, 4 o'clock in the morning. Then London would spike down, and then distribution would be the New York.
Okay.
So what I mean is this. This is the candlestick.
Does it happen every day on currency pair?
Yes. I'll show you. Let me do this. I wanna do this. Just think about a day. Okay. I want to make this line thicker. Okay. Imagine this is a candle. And what I've drawn is like this. What I've drawn is like, perhaps let's do this. So what I've drawn is like this. You see this A? This is accumulation.
Okay.
That's your manipulation.
Okay.
That's your distribution. Makes sense? This is the candlestick.
Okay.
Daily candlestick. So the daily candlestick will open at this price. Okay, I mean, price has been consolidating. Then this is how high price has been. Okay, let me rather say accumulation, consolidation. Then this is the fake out or the manipulation. But the right direction of this candle was upside.
Okay.
Makes sense? Okay. Therefore, let's go. Let's go now. Let's go. We've discussed why we have BMSs. And the other point I want to stress is that always trade in the direction of the BMS. You always trade in the direction of the BMS. Once you have the BMSs, what follows is the OTEs. The OTE,
which is your entry.
your OTE is at your low risk entries, optimal trade entries. So when your OT will be found where there will be equal lows. And you have to look at those equal lows, watch for the fake out close to the trend line.
Okay.
Watch for the
OT
fake out.
At the equal lows.
You watch your OTE will usually be at this point close to the trend line, and normally what takes out the liquidity will be the pin bars. Can you see this behavior? There's a pin bar takes liquidity, then we buy this one. There's a pin bar takes liquidity, we buy this one. There's a pin bar takes liquidity, we buy this one. Pin bar takes liquidity, we buy this one. Then you see common behavior. Daily spin bar there takes liquidity, we sell this one. There is it here. Takes liquidity, we sell this one. There is it here. Takes liquidity, we buy this one. So I think you've got network problem. Okay. I'm waiting, guys. I'm waiting for my I think for network to come back. Just pause a little bit and just see what's happening. Yeah, so below the OTEs, that's where there is opportunity. This is opportunity. You always have to buy the consolidation. Every time market gets the hello?
Sorry, my network breached.
No, it's all right. Okay, so what my point I'm trying to make is that this is a good analysis. This is a good analysis. Impulse, pullback. Pullback happens in consolidation. So if you are left by this, the people that safe, they say that don't chase the waves. The safe will tell you that there's always a next wave coming. So there's 3 waves. First wave, if it left you, don't worry. Wait for the second wave. Okay. If this one left you, wait for this one. So it's always about waiting for the best opportunity if you don't want to die.
Okay.
Okay. So this was the wave, but the opportunity comes with the pullback because the pullback shows you where the liquidity is. When the liquidity is up, you buy the close and above you buy, they close and open above the previous lows. That's right. Okay, so that's what's been happening. Every time there's a impulse, comes exhaustion. It gives you the opportunity to buy, you let it go. After the OTE, it will have more strength to go and break the previous high. So every time there's an impulse, it exhausts to get more momentum to push up, to push higher, to break the previous high, the break of market structure. Then you get this new high. This new high exhausts by leaving equal lows that will give you an opportunity to buy. And this buy will be strong enough to go and break the previous high. At this point, I didn't indicate BMS. I labeled it as previous week of the day, of the hour, previous weekly high.
High. Okay.
But check this. When the new, sorry about that.
Sorry.
When price dropped, in this case, it didn't have much strength to go and break the previous high. Can you see that? It turned before that. This is called the SMS. SMS means failure swing. When price fails to break past the previous high.
You say SMS means what?
Failure swing.
Failure swing.
Failure swing. That is when current price fails to take out old price.
Okay.
You see this old price was taken out by the current price.
Yeah.
But in this case, it's a new case where we have a new price failing to go above previous high.
Okay.
And this is called failure swing. Failure swing did not change in direction of price. So once you have those 2 points, you're qualified to do it. The trend is qualified. Okay. Therefore, so this trend means in these areas we should expect price to turn around these levels. So therefore, when price dropped, it went and broke this previous low. You see? It means this is a break of market structure. Therefore, after break of market structure, always follows what? OTE, After break of market structure comes OTE. Break of market structure, OTE. Break of market structure, OTE. So if this was a break of structure, we should expect for price to drop and come to OTE. OTE usually is at 76.8% or 61.6%. On the Fibonacci retracement level. So we have an idea that price should mostly be moving along this trend line. And that's where our 78.6 is. You can trade 61.8 or 78.6. If you trade 61.8%, your stop loss should just be above 78.6. If you're trading 78.6, your stop loss should be above 100%. Okay. That's correct. Also, you are able to tell how far where would be your first target if you traded that SMS. Okay.
Okay. Then
using your
how do we know our take profits if we are on a trade?
Okay. So this is your previous low, and this is your new high, new lower high. If you measure from your previous low to your new lower high, and your entry is here, you should exit trades at 161.8 at this point. At your previous low. Can you see that? I'm using extensions for that. Okay.
Okay.
Okay, once price came to this, which was the previous high now. I mean, this will be the current low.
Previous low. Okay, current low.
Okay. So we traded that to this point. Now check what happens again. Does this low take out the previous low? No. So this still keeps the trophy of being the previous low. This is also called SMS because the current low fails to take out the previous low.
Okay.
This means price change in price direction.
Okay.
We started to create new highs. That high, this move back, and then if this move will break the previous high, then break of market structure is here. It means we'll be trading the next. We're gonna wait for the next OTE. We have to wait for the next OTE because we have a new high challenge. Break of market structure here. After break of market structure follows what? OTE. What percentage is OTE? 7.8 or 78.6. Always remember that. Can you see? 78.6.
We found a G75 entry. You get me?
Yeah. Come again.
B75 now. We found the entry. We missed the entry.
With the entries.
Yeah.
You want me to go to the current price?
Yeah.
I'm already in.
I missed it though. And I even I have my chart on it.
How can you miss it when you are showing
me? Huh?
You showed me.
Yeah, I missed it. I drew my zone at the current place it turned, but I didn't enter.
You see, the only clued up on this is this was the trend line that's where price was turning. So price is bound to break the trend line. Remember what I said yesterday? The other day, price is bound to break the trend line if it touches 3 times on the trend. And then it will bounce off and then quickly come back to break. But there is an OB here, order block. This black candle was the order block.
Okay.
And it's a break retest. And look at my previous. If you remember my previous analysis, or my analysis on this thing has just been a buy. If you have followed me. Can you see that? Okay, let me go to 4 hours. Can you see this? What can you tell me about this part?
What I can tell you about
my drawings and everything. Can you explain this type of drawing from here, these parallel lines? Just discuss. Can you take me through this?
Starting from where you had a breakout, which give us the OTE, the entry. And there's a breakout that gave us the OTE. So and the price has been making series of higher low. Understand? So and
let me help you.
Okay.
Let me help you. Okay, you see price came from the top here. Okay. Price has been trending bullish, bearish. It was bound to change direction at some stage. Okay. Therefore, yeah, all along price was trending bearish, and at this point seems to slow down where we start to create this. There was this slow, and this slow, and this slow. Then it starts to go in a range mode, consolidation mode, and eventually
the Asian section.
the moment it starts the consolidation mode, it gives opportunity to us because remember, below and above equal lows, there is liquidity.
That's the Asian
Session, we can say. But in this case, because yes, this was Asian session. But the Asian session would probably, because for Asia to open is just within a day. A day in between 2 o'clock in the day, Asian opens up to 6 in the morning or 5 in the morning. Then London opens up to 10 o'clock. Then at 10 o'clock to 2 o'clock, New York. Okay, but in this case, we have this accumulation. But because of the accumulation, we've got the equal laws, which gives us opportunity to try and look for entry. Now, check what happens. Because there's money, there's a pool of money here. The institutions of the banks, market makers, they will buy and sell at this point. They don't lose. They will buy and sell. Their sales will push this price down to take us out of the stop losses. Once they know there's nobody left in this business, in this market, then they will exit the sales and open more orders for buy positions. Then that will push price higher. As a smart trader, as a smart money concept trader, you wait for this to happen. You press your orders when price closes and opens above this line. So I had this trade running. I ended this trade when price was here, and that's how I bought this. I'm still holding, by the way.
Okay.
I'm still holding, and on this I'll just on the smallest account, I just tried because there's an opportunity to buy there. Look at that. Price was creating here. It was difficult because price was creating the consolidation was creating the higher lows, which made it difficult for me to decide which low should I consider. But I went for the low that was close to the trend line, which is this low. And that low, equal low, price takes liquidity. I wait for price to go up, price closes above the line, the previous lows. This was the buy.
Okay.
Okay. Now, because price is broken this line, it will create this other low. You see where price is now? It will go back to still come back. The price will push when it's about here. That's when you see tangible movement.
Okay.
Yeah. No, I think because our meeting will end at 7 minutes time left. But we're gonna cover most of the stuff slow by slow, but we get in there. I can see that.
No.
Yeah, look at that. Look at that. Can you see what happened there if you wanted to sell this one? Well, this one. Either equal low or equal lows. Rather say equal lows. You see this previous low, previous high, and this high. This gives you an equal high.
Okay.
This gives you equal highs, and equal highs creates creates pool of money. The banks want to be part of that money. They want to take that money. They do spike, but I remember I said the pin buy is usually a liquidity grabber. So to tap out liquidity, your job is to wait for this move to go down. When price comes back, you measure this movement, you measure the pullback. That's your entry. You measure the pullback. Can you see 7.8? This entry. So you take this trade, you stop loss above this high. So you trade this one, you enter there, Your stop loss
You
would
said
be
that all your entries are 618.
618, 71, 618 or 78.6, sometimes 50.
Okay, excuse me, draw this Fibonacci here. If I want to take entry on this horizontal line you drop now, how do you draw this fib now?
Which one? This one or this one?
No, this one, the line you added now, where you said your entry, the 618.
Or are we talking about this?
No, the entry you draw now.
Okay, this one.
Yeah.
Are you talking about this?
Okay, you draw it from that place to okay.
We come from the previous high to the new low, so that you can get the exhaustion point.
Okay.
So it's more mainly I'm trying to say this is an impulse, this is a pullback, impulse, pullback, just like that. So because market is giving you that, so you only measure. We are okay. Let me do this. This is an impulse, okay, and market impulses in the direction of the price. Pullback. It will always happen when price is impulsing. It will exhaust. It's like you are speeding. You exhaust. You start running those short runs. You stop. You run. You stop. You run. You're creating the equal laws. So I measure that from the beginning of this impulse to its low. Can you see? So this exhaustion means this person, if it were you run sprint, you exhaust, meaning you are resting. Then from there, you're going to have a sharp shoot, again, a higher sprint.
Okay.
To break the structure here.
Okay. And your stop loss will be above 100.
So now if my trading, if my entry is here, that's a good question. I think it's a good close. If my entry is here, your stop loss, the entry for your stop loss validation levels is above 78, but the most recommended invalidation level it's above 100. Therefore, the distance between your entry and your stop loss will tell you how much the risk for this trade. If you go and put 0.1 here, and your account is small, but it won't even get to stop loss. You will be cleaned.
Yeah.
So you need, because of the gap between the stop loss and the entry, you must tell how much lot size. Do I go with 0.005, 0.002, or can I go 0.05? The tinier, the smaller if let's say, what about if this was 78, not 1.8? The entry is there. So you see the risk is much better, much smaller. So you can go full blast. The smaller the gap, the bigger the lot size. The bigger the gap, the smaller the lot size. I think so far so good. I think we're done for the day.
Okay.
Yeah, I'm just happy that I analyzed this earlier. I'm happy that it's coming out the way I planned it.
Okay.
Because liquidity has been tapped at the bottom. Let's go. You see, liquidity has been tapped here, and there is the overall trend. Can you see the overall trend? I'm expecting price to come to. It will range, but it should come to this end. That's when we should expect maybe a nice huge fall or break above that.
Okay.
That's why I have got. It's like we are here, and there's this gap left before the trend.
Okay.
So I'm quite adamant that we're gonna touch the trend, meaning price is most likely to go higher.
Okay. What I still don't understand is, okay, how you detail your chart. I like how you detail the charts. You put this, you label it. Yeah.
No, labeling is easy. Okay.
Okay.
Let me go to my 4 hours. You see? So, okay, what I'll do is next time you're going to share the screen, I'll be telling you what to do.
Okay.
And next time, okay, can you see that? How nice it is. What I'll do is I'll let you take it. You'll be drawing the chart, and I'll be telling you where to go.
Okay.
Okay, you see how it looks like. So this actually this I think we're gonna cut now. Less than a minute. This fake out was actually the testing this trend.
Because the testing of the trend line.
Yeah, and it had to, but in its effort to do that, it's ended up faking out.
Okay.
Yeah, but the leveling, don't worry. What I'll do is next time I'll tell you where to go, but you come